The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the October 1st wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there is off to a great start of their day. Let's make sure that you and I, that we do everything we can do to have a wonderful Wednesday. And we should always remember that we are not creatures of circumstance, but instead creators of our own circumstances. Something to think about. Hey, during the next hour, my outcome is to share with you extraordinary tools for trading and investing. Those are the tools we refer to as the lightning bolt pattern, the A to B equals CD, the Fibonacci expansions and retracements, the Japanese candlesticks out there. We'll look at every tool that we can. Remember, this is an interactive show. That means we'd love to hear from you. That means you got to give us a call. Just dial that phone. You know, you've got that rotary dial phone out there. Wouldn't it be great to have those back? Maybe even put a nickel in. Hey, you can put a nickel in it. Just give me a call at 877-927-6648. Internationally, 727-445-1044. Together, you and I, we can go hunting for bulls and bears. It is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we got the Dow off 150 points. Hey, what's up with that? The S&P is down 16. Composite off 49. Russell 2000 down 11. DAX is off 94. FTSE down 75. Looks like there is no Oktoberfest party going on. Goldilocks up $4 right now. We'll see if it can hold on to these gains. It's trading out at $12.16. Silver up 21 pennies, trading out at $17.27. The King dollar up only 2 pennies right now. A lot of movement in the Japanese yen. We'll go take a look at the currencies. We'll go take a look at the metals. We'll take a look at anything that you would like. Moving to the upside out here, we got Acuity Brands Inc. AYI is a ticker symbol, up 6%. Tech Mirror Pharmaceuticals, they're up 16%, giving back some of its gains out there. They're on the move higher as a result, unfortunately, of the Ebola scare. More than really just a scare out there. You got Panera Bread. Its loaf is rising, up 2% this morning, up 384. Portola Pharmaceuticals up 12%. Babcock and Wilcox up 7%. Angie's List is on fire. What is it that they are selling? Is Angie's List being bought out? ANGI is the ticker symbol. Well, I don't see any news behind it, but it's up a whopping 30%. Maybe somebody that didn't know something that's not being pulled up on my screen up here. But Angie's List is a whopper to the upside here. We got New Link Genetics up 8%. RCS Cap up 7%. To the downside, we got Priceline off $21, down about 2% out here. Angie exploring a sale. Thank you. Z in the den. ADP. They shed one of their units, so that's why that's trading the downside. Netflix off $9. VIP Shop Holdings, that's off about $9. You got Greenbrier Companies down 6%. Stratus is one of the 3D makers off $6. All right, let's go check in on the markets out here. Let's start off by taking a look at the ETF structures out here. Let's go see what we've got going on. Let's start off by taking a look at the IWM. We got to take a look at the IWM because from the IWM is where we really get a clue as to whether Stevie's going to be right or wrong with regard to this bottom that I am looking for the market to form, and still looking for the market to form out here. That means we're going to take a look at May 15th level, 75 million shares. We're trading inside there right now at 108.30, 12 million shares so far today. So it's 12 million going against 75. We've only been trading for about 40 minutes. We'll see what kind of volume. This has had light volume on the pullback so far. What you'd like to see is a test of, the low of May 15th is 107.44. The test of February 5th is 107.27. Let's get the test of both of those out there. Let's go for the 107.27. That had 60 million shares back there. If, in fact, it can't bust them down, then what will it try to do inside the consolidation? And it'll extend this consolidation, which has been in place for nearly a year, 11 months out here. It's began in November. So, it began in November. So we're talking 11 months. We just began October out here. That's a pretty long consolidation. Hey, a bust of that level, meaning you close below that 107, 27 out here? 107.27. You close below that with more than 60 million shares. And then there's something else going on out there, because then in the case of the IWM, you'd have a 13-point move to the downside. So it looks like we're going to get that test. Is that going to be today? I don't know. But the IWM is what we want to go ahead and keep our eye on, because that's the weak link out there. That's the weak hands out there. And I believe that the weak hands were, that the strong hands were out there buying the IWM yesterday, saying, come on, keep coming back to Papa out here, looking at that 107-ish area out there. So we'll continue to pay attention to that. We take a look at the QQQ. Let's go see what we have out here. Remember the Qs, what do? They make lows with volume. So there's numero dos that we want to be paying attention to. Why does Stevie say that? Well, if you take a look at the volume configuration on September 25th out here, we had 68 million shares to the downside out there. That's the kind of volume that, we had 68 million shares. That's the kind of volume that has marked high lows in the past out here. So what do we have for volume today? 13 million shares. So I say pour it on. Pour on that volume. Pour on that ketchup. Let's get some little more red blood out here inside of the Qs, because that is what you want to see. You want to see those nice, big, high-volume bars being formed out there, because that is what forms a bottom inside of the Qs. Take a look at the April 15th, though. You had 84 million shares back there. Prior to that, back on the April 4th level, 131 million shares. All of those volume bars were in anticipation of going ahead and marking a bottom out here. Of course, it was the giveaway was on April 15th when you had a key reversal session out there with volume, 84 million shares. We'll see what kind of marker we get this time around out here. But that's what the beauty of bottoms are. So if we can get both, if we can get the IWM to get moving down, do with light volume, go test that swing point, and get the Qs to come crashing down with volume out there, then we'd have two confirmations of a bottom that is forming inside of the market. And those are really the only two ETFs that we need to keep track of. But we won't just keep track of those two. We'll go take a look at the other ones. That means the SPYs in volume, hey, not so much. So we don't really pay attention to high volume lows in the SPYs, because they're not really the ones that have that same pattern out here. If we do take a look at the SPYs right now, 195.46 is what it's trading at. Volume so far today, 37 million shares. If we go take a look at swing point retracements from low to high, meaning August 7th to the high that was put in out here on September the 18th, what you're going to see that the SPY is headed to 194.97. That's its next stop. That is your 0.618 retracement level. It can move lower than that, that's for sure. It can get to 193.02. That would be your 0.786 level. We'll see not really much in the way of a true A to B equals CD pattern that is formed out here in the SPY, so no reason to give you any kind of projection there. So we'll see what the SPYs do, but it's really going to be all about the Qs. It's really all going to be about the IWM out there. But let's go take a look at the Dow Diamonds. The Diamonds right now, they're trading down at the price level 168.57. About 2.5 million shares out here. The Dows, if we go take a look at retracements from low to high out here, what are we going to see? That September 19th high, you're going to see below the 0.382 retracement. Hey, but that also means inside the Dow, we'll go take a look at the Dow. That means that the Dow should be breaking through its hammer candle. And, of course, you know, if you close below the low of a hammer candle, if you're long, you are wrong out there. And, of course, we'll take a look at where that could trade to. The diamonds themselves, 167.02. That would be your 0.618 retracement out there. I suspect that is what the diamonds would like to be able to do out there. But we'll see. Now let's go back. Let's take a look at the indice. Let's go put the indice up on my screen out here. We'll go take a look at a couple of them. Well, actually, let's do this. I can come back to the summation index. We can we'll take a look at the New York Stock Exchange in a moment. But let's go take a look at the Dow. So under fire today is the hammer candle inside of the Dow. Now that low, which is under attack, is the low from September 29th. That price happens to be 17,107.69. Hey, if somehow, by some miracle out there, meaning buyers coming in, if you see the Dow close back above 16 what did I say, 17? 16, 934.43. That's the number you want. 16, 934.43. You're at 16,899. You will have a rejection of a hammer candle. The single most bullish individual candle that can be formed. And, of course, as you know, when you break below that, when you're long, you're wrong. And at this stage out here, the problem with the Dow is there's no floor. The only swing point inside of the Dow takes you back to that August 7th level. So I can take a look at retracements, and maybe that's where price is headed to. But the reality is usually it's a swing point that you want to take a look at, and that's the swing point that sticks out. So we'll watch today. The key inside that Dow, again, is going to be that price level of 16,934.43. You get a rejection of that area, and you want to add just another indication of a market that's making a bottom out there. Well, I would have to say that would be it. You can put that in your recipe book. Let's go take a look at the New York Stock Exchange. Now, the New York Stock Exchange, you've been following me for a while. We know that the NYSE has been traveling in this beautiful rising price channel, and that's under attack this morning. Does that make me think that the New York Stock Exchange is not forming a bottom? Not for a second. Not so fast. And the reason why, if we take a look at this, this looks like this could be forming the type of bottom that formed right back here during the time frame of June 24th out here. Now, of course, Stevie believes that Santa Claus is coming to town early. We just haven't figured out the date. I don't know what his itinerary is, but when we see it, we will know it. That is for sure. And if you go take a look at the lows that were formed back between June 5th and June 24th out there, what we saw that we saw lower prices. How about that? I think I used the word saw just a few too many times out there. Nonetheless, what we did see was we saw a little rising bottoms in that price oscillator out there as things were pushing lower. And that is such a key when you understand market breadth out here. If we take a look at this stage, we saw a nice big push, a nice big price oscillator move down, got down to 244, minus 244 that is. That was on the trading session of September 25th. Hey, the market's pushing lower. Where's the price oscillator as we speak right now? Oh, it's only at minus 181. Can it get lower? Hey, it can do anything that it wants out here, but it's not below that low, folks. I'm telling you, there is a bottom that is being formed out here in the markets, and it is going to be a beautiful bottom out here. And that's what all these charts are really telling us right now. I was expecting choppy weather. That's why we're not long the indices in my newsletter. We're long some other things out there, but we are not long any of these indices out here. So the New York Stock Exchange doing what it should be doing in order to be able to make a bottom. The IWM also doing what it needs to do. We just need the cues to just pile on, get some more volume. Let's start selling the heck out of Apple and a number of other things out there. Let's go take a look at what else is moving in the market. We got to go take a look at the currency pairs. Let's go take a look at the king of beers out here, the U.S. dollar index. Looks like we're going to have to wait till we get back from the break. But we may have just witnessed the highs, and we may see a fall like you haven't seen before. 877-927-6648. This is Steve Rhodes, TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the show, folks. We got the Dow off 135, S&P down 13, Composite off 40 points out here, Russell 2000 off 7. I mentioned the king of beers. Of course, that's the king of dollars out here, the U.S. dollar index. We noted during the first hour out here that on the 120-minute time frame, what we had was a key reversal session out here that it took place as we were coming into the 10 a.m. time frame out there. We're seeing a little bit of follow through to the downside. And Stevie's just looking for spots where we might see some weakness in the U.S. dollar index out here. You're going to see a fall from grace out here. That doesn't mean that the rise is over, but you're going to see one heck of a pullback, one heck of a retracement. This is going to take place overnight. No, do I really know how it's going to unfold? Heck, no. But what I do believe is you're going to see one large retracement inside of the U.S. dollar index out here. And so we're just looking for possible signals. Today could be the day, maybe not. But the 120-minute chart has given us the best signal thus far that may take place out here. And that's what we're looking at as we take a look at our screen here at TFNN.com. Now, of course, on the daily basis out here, it needs a little bit of work to the downside, and anything is possible out here. The little bit of work would be you can't get a key reversal session today because you haven't taken out the high here from yesterday. And not taking out the high, the question is that a peak G potential, or is it only the third wave up with a C? We won't really know for a bit of time, but the first test would be the U.S. dollar index getting down to 85.16. And it's not going to happen today, or I don't believe that it's going to happen today, but you could get a bearish engulfing candle, and that would be the first bearish sign since September 16th out here. But it's got a lot of work to do to the downside, so let's go check in on the Queen of Versailles and see what the Queen is doing out here. Let's go take a look at the euro. The euro right now, I got a little bit of a delay out here. Looks like that is flat. But the euro is really not providing us with any kind of reversal signal here. This is the daily chart. No reversal signal just yet. Of course, if this could get its mojo in gear, it's also making a lower low, doing it with less relative weakness out there. So you could have a nice price relative strength divergent pattern, but you got to get that bullish signal out there. Bullish inside the euro today would be a close above 1.26878 out there. We'll see if she can swing for the fences and pull that off. If you can, then you may have your reversal in place for the U.S. dollar index. Japanese yen, that's well off of its session highs out here as we speak right now. Looks like you got a little bit of a shooting star. You certainly got a bearish engulfing candle that is formed. As you know, this thing has gotten into that 1 to 2 A to B equals CD level. That's coming off of the low here at 101.51. That was back on August the 8th. That was your A point. Your B point out here was on the trading session of August 25th as it got to 104.46. Only makes a 30% retracement. That took place over the course of about 4 days out there as it got down to 103.56. Nonetheless makes a 1 to 2 A to B equals CD. And, of course, you know from page 42 in the Art of Timing the Trades. Actually, I'm not sure the page number, but it is in there. When you make a 1 to 2 A to B equals CD, you're going to do something else. And typically it's not a move sideways out here. So we will pay attention to the Japanese yen. Why? Because if the Japanese yen begins to weaken, in this case here pull back, that that puts strength inside the U.S. dollar. It will get stronger. I'm going to just, if it pulls back on this chart, the Japanese yen gets stronger, the U.S. dollar gets weaker out there, and the Japanese yen about a 13%, I believe, 10 to 13%. Of the U.S. dollar index out here. Great British Pound, let's go see what it is doing. It's also a part of that basket out here. The Great British Pound today trying to form a bullish engulfing candle. It can do that if, in fact, it closes above and it's really trying to form an A to B equals CD to the upside. The one that I had marked in there is not the accurate one. It's trying to, bullish engulfing candle occurs today, and that would suggest to me that it has formed the C leg of an A to B equals CD to the upside. Then you close above 1.6287 out here. We want to be watching these currency pairs like a hawk. Hey, look, in the euro, just a dead cat bounce would be huge. And put a lot of weakness inside the U.S. dollar index. Goldilocks holding up pretty well so far. It's trading out at 12.15.70, up $4 out there. So she's trying to put in the old reversal signal out here today. You got a bullish engulfing candle that has formed thus far. So the Goldilocks is doing everything it can to say, I don't really care what you throw at me, U.S. dollar index. And once the U.S. dollar index takes off topside, gold will be like a Maserati, maybe a Lamborghini, could be even a Ferrari out there, but it'll be a Formula One racer as it takes off topside out here. So keep your eyes on Goldilocks. When we get back from this break, we'll go take a look at silver. We'll go take a look at light sweet crude. That got crushed yesterday. Let's go see if we can figure out what it's doing. It's up 75 cents right now. This is Steve Rhodes. This is TFNN.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 156, S&P off 14. And let's go check in on silver. Let's go see what Hi-Ho Silver is doing, up 24 cents this morning. See what kind of candle formation we've got going on here. Silver, if it can get above 1740 out here, that would be your unfair low. That would be your old support level, which could be resistance. So 1740 is a key to watch. If you can see silver, though, close above yesterday's open at 1746, you'd have a bullish engulfing candle out there, and one of some consequence. It would be actually the first real bullish signal that we will have seen inside of silver in quite some time out there. So we want to be paying attention to that U.S. dollar index. We want to pay attention to silver. We want to pay attention to Goldilocks out here. So far, they are behaving very well. A lot of time left in the trading session. Speaking of a lot of time left in the trading session, let's go look at a couple of different time frame charts out here. Let's go take a look at the ES Mini, see what we've got going on out here. We talked about the hammer inside of the Dow earlier. On a 30-minute basis, you got a little hammer candle inside of the ES Mini. We'll see if that low can hold out here. That's going to be your key level of support to be watching, 1946.50. That is the hammer candle that formed here as we came into this 10:30 session. Close at 10:30. So we'll see if that gets taken out. If you're bearish, that's what you want to see. Because if you're long, you're wrong, is the expression. Let's go look at a couple different time frames. Let's see if there's any other bullish candles. No other bullish candles out here, so you'd want to pay attention to that price level inside of the ES Mini on a 30-minute chart to see if, in fact, that level holds or it doesn't hold. That'll give you a good piece of information out here. If we take a look at the daily chart for the ES Mini, take a look at where it's trading at, down at the 1948 level right now. If you go from the swing point low to the swing point high out here, 1933 is your 0.618 retracement level. So it looks like that is likely where price is headed to your trade at 1948 as we speak right now. Hey, the month came to an end, didn't it? Did it? How about that? Didn't it? Let's go take a look at some monthly charts. Let's go see what kind of messages we can get out of the monthly charts out here. Let me put my monthly charts, monthly, weekly charts, so we can get a feel. Let's go take a look at the S&P 500. Let's go see what it did out here. Now, the S&P 500, what we can see here, if you're watching this on Tiger TV, as I mentioned yesterday, it still has a move to the 2350 level that it would like to complete. Has not done that. That's because of the break of its 16-year consolidation, that 800-point move out there. So it still has room to run to the upside. It's made a higher high. It's done it with less relative strength, but last month we did not see any kind of reversal signal, any kind of reversal candle as we speak. It is still, on a monthly basis, it is still the buyers, the bulls that are in control of the S&P 500 out there. So no reversal signal, just says, hey, just a natural, normal pullback going on inside the marketplace. Well, look at the weekly chart. Well, we don't need to spend time on the weekly chart. We can do that mañana. We can do that tomorrow. Let's take a look at the Dow. If we take a look at the Dow, what kind of candle was formed last month out here? Just a spinning top. That's it. Not a doji, not a high wave candle. So the Dow has not lost its way. It did make a higher high. It did do it with less relative strength out there, but it's just a spinning top. It's just a spinning wheel. That's all that candle is. Not a reversal signal out here. So what is the Dow? Dow's got good support at 16,379, 16,701 would be its next level of support to be watching on a monthly time frame. So no real reversal signal as we speak. Hey, you get a reversal signal in the month of October. If you saw a close below the open of August, that price point would be 16,561 out there. So no reversal signal in place for the Dow in the worst month of the year out there from a trending standpoint. When the bears really should have been able to take hold. They did not. Let's take a look at the NDX. The NDX last month just closed just below the swing point high from back in March of 2000. 404,998 was the number. We closed just below that. But otherwise, there are no reversal signals from a candlestick standpoint inside of the NDX 100 out here. The NDX probably still wants to go test that high. And, of course, I say, why you say, hey, why would you say that? Well, I say that because if I take a look at the NDX on a weekly basis out here, I know I said I wouldn't go take a look at the weekly. It's only in that third wave up inside of the Chapman wave, at least the way that I see it, as I'm calling it here. So the NDX says it actually wants higher price. So that's why I'm in the camp of pulling for a big old gusher to the downside. Give me some volume because the Qs make those lows with volume out there. We've already had one. You'd like to see another one, maybe even one more after that to go ahead and cement a nice bottom in place. And that would be inside the NDX. Russell 2000. Russell 2000 is kind of interesting. If you take a trend line out here and you go back to the highs from March of 2000, and then as your next touch point, you use the highs back here in July of 2007, June, July 2007. You got price trading right back to that trend line as we speak right now, which is at about the 1110-ish type area. So we'll see. This is an area that was tested once again. Well, it was tested once we saw a break above that. It was tested back here in May of 2014. We'll see if that level can hold. What the Russell 2000 is doing, the only real pattern that we need to focus on inside the Russell, in my opinion, is that consolidation pattern, because it's been going on for so long. Hey, look, there's a 17-year consolidation pattern. That says 1350. But that's going to have to wait until we see what the current consolidation does at its lows out there. If we take a look at the New York Stock Exchange on a monthly basis, hey, as your weather forecaster here for the NYSE, just some dark clouds out there. That was your reversal signal, but not the kind of reversal signal that has marked highs inside of the New York Stock Exchange in the past out here. And so you've got support certainly down at 10,387.17. I don't suspect we're going to see the NYSE push down to that level. We'll continue watching the summation index, the price oscillator. We'll see if we can get to lower lows and do it with a higher price oscillator reading out there, because that has identified a nice market bottom in the past. We'll see if, in fact, that's what the market does. We won't know until we start to see some turn up in the market out here. If we take a look at the NASDAQ composite on a monthly basis out here, no reversal signal here last month as well. Yeah, making higher highs, doing it with less relative strength, but no reversal signal inside the market. It's still trading above its March 2000 swing point, so it says it really wants to go test the highs in the 5,000 area. Right now you're trading at 44.42, and that's a quick look at the monthly chart for each of the indices out there. Tomorrow we'll go and spend some time and take a look at the weekly charts and see where we are at. Let's go take a look at, let's go back and take a look. Well, that didn't work. I was trying to switch over to a different chart. Right there. If I do that, that'll clean this up. Okay, let's go back and take a look at the, let's go take a look at the VIX index out here. You got the VIX at 1687 right now, a little bit off of its session highs. This thing is stretched to the hilt out here, and we ought to see a snapback pretty soon. So even the VIX index, yes, it's above its 50-day exponential moving average. That is not good for bulls, no question. And I'm just simply trying to utilize this as a tool to also help to call the bottom out here, to call the big, beautiful bottom that Stevie believes is what is really being formed inside of the markets. Let's go take a look at some things that are moving in the marketplace. Let's go see what's moving to the upside out here. You got Acuity Brands, AYI is the ticker symbol. Profits up 22% out here, so this has got a nice move. Let's see what kind of volume is behind this. You've got 491,000 shares taking out a swing point here. Let's go pull this back just a little bit, see if this is trading into anything. Yeah, so you got Acuity Brands. It's got a gap out here that it's going to try to run into. This could be a little resistance area. Resistance number one is at the 132.51, and 135.51 is your real resistance area. Acuity Brands taking out the September 19th high. That only had 393,000 shares, so it's got the volume. I expect this will run into resistance at that 132 to 135 area. That's what's moving to the upside. Tecmira Pharmaceuticals, we won't pay attention to that. Let's go take a look here at Portola Pharmaceuticals out here. Portola Pharmaceuticals, that's trading out at 28.64. Looks like that wants to go make a run for its swing point out here from the trading session of July 3rd. That only has volume of 117. You'd have to pretty much multiply that times 2. Let's just call that about 300,000, and you've already done 359. So it's pushing, hasn't gotten to the swing point, but it's pushing into a swing point with volume. It should go test that high. Again, the high there being 31.48. Ticker symbol there, PT. LA. If we take a look at Panera Bread, let's go see what's going on inside Panera Bread. I don't see what's going on here, but my screen, I'm on a different screen, so it's a little bit narrower. But let's take a look at what Panera Bread is doing. It's trading higher. It's up above its resistance level. It's got its own little, how about this? It closed its window out here. That's bullish. The window, which took place that didn't work. Let's try that one more time. The window, a little gap down that took place here on the trading session of April 30th was a gap down with 2.6 million shares, but you moved up into it with a gap up yesterday, only 1 million shares, so light on volume. Nonetheless, it closed that window. That means it's no longer an area of resistance. If we take a look at where its next area of resistance is inside Panera Bread, that's going to take you into the trading session from March the 26th out there. The low is going to be one possible area. The high high of that candle session since it had such wide price spread and accelerated volume out there. The 180.55, the 170.03 level, that is the area where Panera Bread is likely headed to. Ticker symbol there, PNRA. You've got... what do we got here? Let's take a look at some things to the downside out here. Priceline. So let's go see what's going on in Priceline. What do we know about Priceline? It's got that high volume low. Looks like maybe it wants to go test that eventually, which it does. That's at a price point here of 1,087.26. 1,087.26 is where it wants to head to. It's trading right now at 1,1138.53 out here. Volume today on this pullback, 324,000 shares. That 324 going in at 2.6 million. We've been trading for over an hour. It does not have the juice to take out that low with volume, but you'd like to see a test of that area, that again being 1087.26. That is on Priceline. That's the leader to the downside dollar-wise. You got the ADP, that's on the sell-off of one of its units out there. Netflix off 2.5% down, $10. Let's go see what it is doing as it trades lower. Netflix here trying to take on its most recent swing point from September 22nd, 2.3 million shares. You've done 835 so far today, so it is taking on a swing point, trying to crack a swing point with volume. If it does that, that could set up an A to B equals CD to the downside. The price projection on that, as far as our A point, you'd be up here at the September 9th high, your B point down here on September 22nd, the swing point that it is dealing with. We'll use yesterday's high as your C. 1-to-1 would take you to 406.78. I'd have to say more likely 393.07 if it can take out that swing point, if it can take out that B point. That is on Netflix. Intercept Pharmaceuticals down $9 and change, off 4%. ICPT is a ticker symbol. Let's go see what this is doing. Intercept Pharmaceuticals had a big breakout session on August the 12th, but it was not able to hold those gains. Nonetheless, this is pulling back into that breakout area, which is really at the low of the August 8th level. And that price point is at 220.07. The volume of that breakout to the upside was 6 million shares. Today's volume so far, 149,000 shares. Close, but no cigar. Not even close. The actual area where it broke out from on August the 8th, that's got 358,000 shares. So it's pulling back into that session with some volume. Now, the key here on Intercept Pharmaceuticals, Oh, that's the key. This thing has got a nasty gap up here from January when it was down at the 71 mark out here. So if this thing, at this stage, what you'd have to do is if this thing closes below the April 15th level, which is at 209 even, Stephen, out there, you'd have to say look out below. Look out below is what you would have to do. Let's go take a look at, you got Biogen. Let's take a look at BIB, B-I-I-B. It's off 1.8%, down $6 right now. Obviously part of the IBB out there. Let's see what this is doing on its retracement this morning. 228,000 shares coming back into it's coming back into a couple different areas. You got a nice sign of strength out here. We'll mark that on the screen for you. That's at the price level of 308.68. It's also coming back into a swing point from September 15th. Million shares there. You've done 228. Okay, you've been trading for over an hour. Maybe it seems like it's coming into that swing point with some light volume out here. A million shares on August the 12th as well. So BIIB, Biogen, looks like just more of a consolidation pattern than anything else at the moment. Also to the downside, we got Greenbrier companies out here. GBX is the ticker symbol. That is off about $5, about 8%, $5.78. Looks like it's got some pretty good volume behind its move. Looks like Greenbrier coming back to its breakout session. That breakout session would take it to the price level of 58.26 to anywhere around, well, you probably have to use about the 60-80 area. This had a wide price spread accelerated volume day of 3.3 million shares. That was on July 2nd out there. So far this morning, 900,000 shares. So this is coming back with a bit too much volume, but it could lighten up on its loafers as it gets to that $60.08 area. Right now, we got the Dow off a total of 149 points. The S&P down 13, Russell down 8. We get back from this break. Let's go back and let's check in on the IWM. Let's go check in on the Qs. We'll check in on their volume This is Steve Rhodes at TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow off 152, S&P down 13, Composite off 45, Russell 2000 off $7. We're going to go back. We're going to just take a look at the ETF structure out here. We'll take a look at the IWM. We'll go take a look at the Qs. Those are the two areas that we really want to focus on. So if we take a look at the IWM volume so far today, about 23 million shares. We've been trading for an hour and a half right now. Remember the volume that it's going up against. It's trading into two swing points as we speak. Those swing points being the trading session from May 15th, 75 million shares there. So volume really needs to continue at this pace, which is not a likely outcome inside of the IWM. It's also going against volume of 60 million shares out there. So it's trading into those swing points. The top of the May 5th, February 5th swing point, I should say. The top is 109.15. You're at 108.71. The top of the May 15th is 109.21. Again, you're trading at 108.73 right now. Any close inside there today, light volume or not, says that you are likely to go test the lows out there. That's really what you want to see, a test of those lows, a rejection of that. Simultaneously, what you want to see is you want to see one big heck of a push in the Qs. So we want to see the IWM lighten up in its loafers on the move down. We want to see the Qs just pick up steam like you can't believe out there. We want to see it tar and feather those equities inside of the Qs out there. 20 million shares so far to the downside. The volume on September 25th was 68 million shares. So we'd like to see a 68, a 69, a 70, a 75, as big as it can get. We want to see big volume down there because that helps us to really set the hook of the next big bottom that will be put in play out here in the marketplace. Inside of the index that really led things off with regard to the move off of the top out here, well, it was the New York Stock Exchange, and as we speak right now, it's continuing lower in price, but it's doing it with, we'll call it less market breadth out there. Last time we saw a nice big low out here, that was on September 25th. We got down to minus 244 in our oscillator reading. We're only at minus 167 as we speak right now. That is a very large sound of a bottom that is being put in place. And yes, I am probably the only one in that camp, but it is the camp. I just call them like I see them out here. Expect a choppy market for the next couple of days. Expect a choppy market until that bottom gets put in. But those are the levels that we want to be paying attention to. If we take a look at the VIX index here, I pointed this out to subscribers of my newsletter service here this morning. And if you take a look at this, you got the Bollinger Bands up at the top. You want to talk about the rubber band getting stretched out there? Well, that's in place. That rubber band is about to snap. That doesn't mean it's going to snap today, but it is going to snap. And when it snaps, that's going to help us to potentially set the bottom inside of the marketplace. I don't know when it's coming, but it is not that far off. It's going to be at a coming attraction near you out there. The VIX is traveling well above its 50-day exponential moving average. That is for sure. But it's in the process of forming a top as well. Will the U.S. dollar index form its top today? I don't know. It was listening on the show earlier, and it said, hey, I don't think so. I think the U.S. dollar index is now being sponsored by Lee Corso. It is off of its session lows out here. It got back into its old market profile low at about the 85.90 level and bounced right off of that. It said, hey, key reversal session or not, I don't think so. Hey, folks, it has been terrific to be with you. It is Wonderful Wednesday. Our man Basil Chapman is out for the day, so I believe they're going to replay one of the first hour of the Trader's Edge show. So have a wonderful Wednesday. I look forward to seeing you tomorrow morning. And make sure you place your trade, and congratulations to all the winners from yesterday. Looking forward to seeing 5 new names up on the board tomorrow morning. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.